This week's 1044 is brought to you by Chevron Delos 600 ADF Ultra Low Ash Diesel Engine Oil. It's time to kick some ash.
How shared truckload freight can help boost efficiency for fleets.
Hey everybody, and welcome back to the 1044, a weekly webisode from the editors here at CCJ. I'm Jason Cannon, and my co-host on the other side is Matt Cole. With fuel prices knocking around at and near record territory and rates on the spot market falling in recent weeks, there's no doubt that fleets are looking for ways to maximize their efficiency and get the most out of every mile that they run.
There are times when shippers will purchase truckload service but don't have a full trailer worth of freight to ship. For the truckload carrier, empty space in the trailer means lost potential revenue. We spoke with Chris Pickett, Chief Strategy Officer at Flock Freight, who talked about shared truckload freight and how it can help trucking companies fill empty space on partial truckload shipments.
Yeah, so Flock Freight was started in 2015, and effectively our mission is to use technology to fill trucks. All right, so we see a void out, in the trucking industry, kind of between less than truckload and truckload. Where on the one hand, you believe there's a certain segment of freight that moves LTL that would be better served by moving through a hubless, less than truckload model, thereby bypassing the kind of the fixed hub and spoke network of the typical national less than truckload provider. And for certain shipments, that means shorter transit times, less damage because just technically doesn't get handled as much, and fewer carbon emissions. So we believe there's an opportunity to offer a better premium service for some portion of freight that typically moves less than truckload. On the other hand, we also agree that there's a tremendous amount of full truckload that isn't actually full. Underutilized full truckload that moves in full truckload quantities simply because the truckload rate is lower than the volume LTL rate. And so we believe by leveraging technology and operations and an awful lot of hard work that we can build a scalable platform that offers reliable shared truckload service that solves both problems and effectively, better utilizes the available truckload capacity that already exists out in the U.S. marketplace. And while we're certainly rooting for technology advancements around autonomous vehicles and you're resolving the driver shortage someday, we think an awful lot of good can be done by focusing on what's out there today and just finding a way to collaborate more efficiently across the supply chain.
Chris says that for carriers, shared truckload freight gives carriers the opportunity to make 20 to 40% more revenue than a traditional one-stop truckload delivery by finding partial shipments to help fill a trailer to better utilize the equipment and better fulfill its revenue potential.
For shippers, it's basically at the point of sale, we're going to commit to a hubless transportation move. Whether it's 2 pallets, 4 pallets, 16 pallets, 4 feet up to 40 feet, we're going to give you a fixed price with a guarantee that freight won't get touched more than twice. Once to load, once to unload. We'll never go through a hub from point A to point B, which gives you effectively truckload level service levels, tracking, less damage, shorter transit times, less carbon emissions. On the carrier side, we believe that the two primary applications are one, really, giving carriers access, with a couple of clicks through an online portal to higher paying shared truckload freight. So effectively, those are multi-stops. But, what Flock has done is, put an awful lot of hard work and tech and ingenuity into building reliable multi-stops. I think multi-stops, in my experience, tend to get a bad rap, across the carrier community, where you hear multi-stop, that just means more time, more potential for a disruption to happen, more potential for a 2-day transit to turn into a 3-day transit. Kind of compromising the unit economics, let's stay away. And I think Flock realized that early on and acknowledged that, we've got kind of to change the perception of multi-stop out of the industry, such that when you take a multi-stop shipment from Flock, which is effectively what a shared truckload is, you can have some level of confidence that multi-stop is going to execute based on the terms by which you accepted the shipment. If it's a 2-day transit, it's going to be a 2-day transit, or if it's not, you're going to get compensated, fairly for that. If it's a 2-pick, 2-drop, and one of the picks goes sideways, and the actual shared truckload doesn't happen, you're still getting compensated for the full amount of the load that you took under the terms by which Flock offered it. So we believe, and we can prove that generally speaking, from our perspective, shared truckloads can pay anywhere from 20 to 40% more versus the comparable 1-pick, 1-drop as measured over days, hours, service time. So we believe that can give motor carriers access to generally higher paying pools and shared truckloads at scale in a way that no other platform can provide that. So when it just offers a higher paying experience for a motor carrier, that's incentive to maximize the revenue. And we think the other offering is, and we believe this already exists, where we have the highest concentration, arguably, of pools and partials of anywhere in the industry, or if a carrier has one of those underutilized full truckloads, whether they're getting paid full truckload or not, here's an opportunity to go out to a marketplace in a very seamless fashion and identify, partial shipments that can better utilize the revenue potential of that truck or that trailer, per that unit at a time, without compromising the service commitment you have on that other piece of freight that's in the back of your truck. So we see one, access to higher paying freight with shared truckloads and and pools, but also an opportunity to help eradicate that air you're shipping in the back of the trailer with actual revenue paying freight. That again also leads to driving up total revenue potential for that seated truck for that period of time.
Broken down simply, shared truckload creates multi-stop loads without the traditional hub and spoke system with less than truckload, essentially making it a third mode between LTL and truckload. But before we get to that, let's hear from 1044 sponsor, Chevron Lubricants.
Protecting your diesel engine and its aftertreatment system has traditionally been a double-edged sword. The same engine oil that is so essential to protecting your engine's internal parts is also responsible for 90% of the ash that is clogging up your DPF and upping your fuel and maintenance costs. Outdated industry thinking still sees a trade-off between engine and emission system protection, and Chevron was tired of it. So they spent a decade of R&D developing a no-compromise formulation. Chevron Lubricants developed a new ultra-low ash diesel engine oil that is specifically designed to combat DPF ash clogging. Delo 600 ADF with OmniMax technology cuts sulfate ash by a whopping 60%, which reduces the rate of DPF clogging and extends DPF service life by 2.5 times. And just think what you can do with all the MPGs you're going to add from cutting your number of regens. But Delo 600 ADF isn't just about aftertreatment. It provides complete protection, extending drain intervals by preventing oil breakdown. Before you had to choose between protecting your engine or your aftertreatment system, and now you don't. 600 ADF from Delo with OmniMax technology, it's time to kick some ash.
I think with traditional LTL, there is no hub infrastructure. We're not going through consolidation points. Right. So I think what we're trying to do is, carve shared truckload as a viable standalone mode right there between less than truckload and full truckload. And so I think for the motor carrier, not stopping through a bunch of consolidation points and loading, unloading. And these shared truckloads are loaded in sequence, what I think is also an important point where it's, last in, first out. Right. So that the last freight bill that gets loaded is the first freight bill that gets unloaded. And, I think the team really works to engineer the shared truckloads such that those dwell times are minimal, and that at the end of the day, it's a route. There's a unit of time that the driver's committed to that route, and there's a total amount that gets paid at the end of that route. And as long as those unit economics make sense and create better financial outcomes for the motor carrier, we think that's a win-win-win.
With spot market rates falling over the last month or so and diesel prices continuing to hover over $5 a gallon, carriers that aren't locked into freight contracts can utilize shared truckload to their benefit to get through this tough environment.
Yeah, I think to your point, we're encountering a pretty dangerous period of time or kind of stretch of the cycle from our perspective for the average motor carrier, especially for the small to mid-sized carriers. I think we're going through that period in the rate cycle where we're starting to see spot rates break lower. And they're breaking lower at a much faster rate than contract rates. So if you're a large motor carrier, the large nationals that have extensive contract commitments or even dedicated contracts with high volume contract shippers, to some degree they will be fairly insulated, right? For the smaller providers, especially all the smaller providers that came into the market over the last 18 months, 2 years when rates were at a cyclical peak, because they're small, they're much more biased or exposed to what's happening in the spot market. And that was a great place to be. Up until a month ago, arguably, right, 2 months ago. And now we're going to the period of cycle where we expect there to be continuous, at least a little bit more deflation from here from a spot rate standpoint. So if you think about that spot, and these guys are dealing and gals are dealing with it all day long, so it's nothing new. But you see the spot rate starting to fade lower, while everything else in your expense statement is going up, whether it's fuel, obviously, labor for sure, tolls, insurance isn't getting cheaper. Tires, leasing costs, everything's getting more expensive, which raises that break even effectively, cost per mile. And there's going to become a period of time where, as that spot rate, that revenue line gets too close to that cost line and more carriers start to get dangerously close to that break even line, there'll be some providers that will be likely forced either temporarily or permanently out of the market for some period of time. And so anything that we believe as Flock Freight we can do to especially help that small to mid-sized carrier have access to the revenue opportunities that exist in the marketplace, which is higher paying pools and shared truckloads, but then also partials, right? Where every bit of revenue generating freight is going to help in this kind of environment. We believe we can take a material role in helping more of those, exposed carriers, thrive and stay alive, arguably, long enough to make it through this downturn in the cycle to be there when rates turn on the other side of this.
Chris says Flock Freight is continuously looking to add capacity across the country, and once signed up on the platform, the Flock system automatically matches trucks with freight based on the carrier's needs.
Yeah, I think certainly flockfreight.com/drive or just flockfreight.com is a great starting point. From there, we can go through the carrier setup process. We're looking for capacity across the country of all shapes and sizes. Certainly, as we build out this shared truckload platform, and there the engagement model will depend on the characteristics of the provider. So they can get completely set up online. We're consistently investing in the platform. Right, the more freight options we get, the better chance of finding an attractive shared truckload for that driver based on where that truck happens to be geographically. And over time, the better and better we get at identifying and surfacing matches at a much more efficient manner than that forcing that carrier to go through and search by themselves. All right, so as the carrier gets set up, they're going to get vetted like a typical process you'd find anywhere else. Once they get set up, they get access to our entire universe of parcels and shared truckloads. And then from there, as they continue to navigate the platform, update their profile. You can identify capacity postings as those capacity postings come in. The system will automatically identify matching opportunities over time and then service them to these providers as efficiently as we can be. And right now, there's a web interface. There's web over mobile, and over time, we'll innovate and offer more creative ways to connect digitally.
In addition to the revenue benefits to carriers, Flock is also looking to find ways to make the truckload segment of the industry more environmentally efficient.
Probably at least as important and something we haven't touched on is, much more efficient for the environment. So a big part of the mission here at Flock is, decarbonizing, truckload transportation. And while certainly, we're not in the business of, attacking the, electronic, EVs versus, internal combustion engines, the sheer act of just making better use and making better utility and getting greater yield out of the internal combustion capacity that exists in the marketplace can get us a long way forward. So we'll take a lot of pride in that aspect of the mission and looking to reduce carbon output of the U.S. trucking infrastructure.
That's it for this week's 1044. You can read more on ccjdigital.com, and as always, you can find the 1044 each week on CCJ's YouTube channel. And if you've got questions, comments, criticisms, or feedback, please hit us up at 1044trucking@gmail.com or give us a call at 404-491-1380. Until next week, everybody stay safe.